Hello, everyone. This is Brent Foster, Northbound Wealth Podcast, Weekly Market Insights. Today is November 11th, and we're going to review last week. Here we go. So stocks surge post-election, Fed cuts a quarter point. That's the headline. So stocks surged last week, fueled by Fed rate cut decisions and post-election enthusiasm as investors look to future policy impacts of a Republican-controlled Senate and executive branch. The House of Reps remains undecided, but looks like it might go too. The S&P 500 index spiked 4.65% last week, while the NASDAQ composite gained 5.74%. The Dow Jones Industrial Average rose 4.61%. The MSCI EAFE index, which tracks developed overseas stock markets, was flat at negative 0.02%. So, it was a shaky start to the week for stocks as investors anxiously waited the election results and the Fed's interest rate decision. On election day, stocks rallied broadly before polling places closed. After the election was called early the next morning, stocks opened higher and climbed throughout the trading session. The yield on the 10-year Treasury fell to 4.307%. Stocks opened higher Thursday, and then the rally picked up momentum after the Federal Reserve approved its second consecutive interest rate cut. Economic news showed that a 2.2% rise in third quarter productivity helped support the move. Stocks finished the week with a number of records. The S&P 500 crossed the 6,000 mark, and the Dow breached 44,000 for the first time on Friday. While the S&P and the Dow closed slightly below those records, each had their best week in a year. So, Y charts, we've got that on the blog. You can check it out at www.northboundwealth.com. Year to date, the Dow is up 17.8%. MSCI EAFE index is up 8.37. NASDAQ is up 29.11%. S&P 500 is up 26.66%. And again, the 10-year Treasury rate closed down actually to 4.3%. Thank you for data from Y charts. As expected, the Federal Reserve cut interest rates by a quarter percentage point at its November meeting. However, Fed Chair Jerome Powell signaled some uncertainty about the pace of future rate cuts, which slightly unsettled the markets, citing a desire to steer between the risk of moving too quickly and perhaps undermining our progress on inflation or moving too slowly and allowing the labor market to weaken too much. Powell said the Fed will continue to monitor the economy's progress. So this week, key economic data. Tuesday, Fed officials Neil Kashkari, Patrick Harker speak. Wednesday, Consumer Price Index. Fed officials Lori Logan, Alberto Musaleam, and Jeffrey Schmid speak. Treasury buyback announcement. Thursday, Producer Price Index, Fed Chair Jerome Powell speaks, weekly jobless claims, and then Friday, retail sales, industrial production, import and export prices, and business inventories data. So we'll be tracking that data for you. Thanks to Investors Business Daily for that calendar. This week, companies reporting earnings, just the notable ones, not all of them. Tuesday, Home Depot, Shopify, Spotify. Wednesday, Cisco Systems. That'll be interesting. Thursday, the Walt Disney Company. Again, interesting. Applied Materials and Brookfield Corporation. All of those will be ones that we follow. I like to use this app called Quarter. And what I do is I put in all the companies that I want to follow. It's free to download to anybody. So you put in your ticker symbols, you follow it. And then every time there's a quarterly update or quarterly announcement, you can actually hear what they're saying on the calls and then get the transcripts. I've never seen anything like it and I love it. Been using it for months now. So FYI. All right, tax tip of the week. Be on the lookout for tax carryovers. So deductions or credits not used fully one tax year may be eligible to be carried over into future tax years. Those include when you have a net operating loss, and then when your total expenses for a permitted deduction exceed the amount you're allowed to deduct in a given year, when a credit you qualify for exceeds the amount of the tax that you owe in a year, adoption tax credits, foreign tax credits, and credits for energy efficiency. Track these, or if you have software to do it, so that you don't forget them from one year to the next. And again, this information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. Hey everyone, today we honor the brave men and women who have served our country. Thank you for your sacrifice and dedication. Your courage, your service inspires us all. Happy Veterans Day. Here's an excerpt from a White Sharks market recap, and it's the weekly market pulse for them. I do appreciate getting it. November 4th through November 8th, the S&P 500 closed just shy of a record 6,000 on the back of a strong weekly performance after Donald Trump won the U.S. presidential election and the Federal Reserve cut interest rates by 25 basis points. The benchmark equity index ended Friday's session at 5,995.54. That's up from last week's close of 5,728.80, rebounding from two consecutive weekly losses. All sectors notched gains, led by the consumer discretionary 7.6% jump. Energy, industrials, financials, and technology also outpaced the headline index's 4.7% rise. Trump, the Republican nominee, defeated Kamala Harris, vice president and Democratic candidate, in Tuesday's vote. His return to the White House will have investors watching the impact of potential new tariffs, the labor market, changes in immigration policy, and benefits to top technology firms, according to analysts. The Federal Open Market Committee, or FOMC, reduced interest rates to a range of 4.5% to 4.75% following a 50 basis point cut in September. Fed Chair Jerome Powell said Thursday that the results of the presidential and congressional elections are not expected to have an impact on near-term monetary policy decisions, including during the FOMC's December meeting. Yeah, right. Whatever. I don't believe that for a second. The U.S. services sector continued to expand in October, according to separate reports from the Institute for Supply Management and S&P Global, released during the week. Recent data showed that the manufacturing sector remained in contraction territory last month amid output weakness. So as it relates to manufacturing, in my view, we could see a lot of manufacturing technical repatriation due to Donald Trump and their economic agenda is to make America great again. And but one of those items I think that's on their agenda is to bring back jobs to the manufacturing sector, which would be a big boost for our economy and our autonomy and our independence from relying on foreign manufacturing. It'd actually be a boon for a lot of people that are working class to have good jobs, good paying jobs, and then and actually in this consumer driven economy, more money, more profits, right? So consumer discretionary's strong weekly performance was led by a 29% jump in Tesla shares, obviously, because Elon Musk is involved in front and center in many ways. Shares, they were bets on the electronic vehicle maker stands to benefit from Trump's victory. The rally pushed the company's market cap past $1 trillion on Friday. The tech sector was aided by a 39% rise in software maker Palantir Technologies, which delivered a quarterly beat and increased its full-year guidance amid growing adoption of its artificial intelligence platform. Communication services rose 3.7% for the week. Warner Brothers Discovery shares jumped 12% as the company logged the strongest quarterly gain in subscribers for its Max streaming platform in September period. Match Group tumbled 14% after it issued a downbeat quarterly revenue outlook following a third quarter miss. The materials sector saw a 1.5% weekly gain despite a 32% slump in Celanese, which posted a third quarter top and bottom line miss. Healthcare grew 1.6% for the week amid a 12% rise in Viatris, VTRS, ticker symbol, following a quarterly beat. Moderna saw a 14% weekly drop even as the drug maker got a boost in the third quarter from an earlier U.S. approval of its updated COVID-19 vaccine. Home Depot, Cisco, Walt Disney, and AstraZeneca are among the major companies scheduled to post results this week, actually. This week. Next week's economic calendar will feature official U.S. consumer and producer inflation reports, as well as retail sales data for October, which we will be tracking, as I've mentioned in the previous segment. But boy, there's a lot of information and a lot of shifting going on. New vibes, I guess. So we'll keep you abreast of that information as it comes out and talk about some relevant topics. Stay tuned for the next segment. So, global growth forecast at 3% for 2025. So, the latest Reuters poll of 500 economists reveals an encouraging global outlook. Global economic growth is expected to maintain a solid 3.1% pace this year, with a projected 3% for 2025. This marks a significant upgrade from earlier forecasts, primarily driven by unexpected economic resilience. The U.S. continues demonstrating remarkable strength, outpacing its G10 peers with 2.6% growth this year. Meanwhile, Asia shows broad resilience, with India leading as the fastest growing major economy. Japan's recent performance even suggests potential shifts in its long-standing monetary policies. Looking ahead, most economies are anticipated to see lower interest rates, though the U.S. may follow a different path. We'll have to see if they hold or not, but it looks like that Jay Powell is still lowering interest rates here in the U.S., but we'll have to see how that plays out next year. All right. Thanks for tuning into this particular segment. Stay tuned for the next one. Testing 1, 2. So for those of you in retirement planning or looking to draw from Social Security, here's an announcement. The Social Security Administration just announced the other day a 2.5% cost of living adjustment for 2025. So what does this mean for beneficiaries? Well, number one, it means the average monthly retirement benefits will increase by about $50. Number two is this is the lowest COLA or cost of living adjustment since 2021, reflecting slowing inflation. Number three, over 72.5 million Americans will see this increase in their benefits. While this adjustment helps maintain purchasing power, it reminds us that relying solely on Social Security may not be enough for a comfortable retirement. Diversifying income sources and looking ahead remain crucial strategies, like investing. So if you have any questions about that, give us a call, 317-399-1107, or send us an email through our website, through our Contact Us page. Stay tuned for the next segment. Here's a surprising stat. Almost 1/3 of investors who had rolled over their 401ks into an IRA still had their assets in cash or cash equivalents a year later. That was the finding of the 2024 Vanguard study reported in the July 22nd edition of the Wall Street Journal. And get this, rollovers that are still in cash after the first year are likely to stay that way for at least 7 years. Younger investors ages 20 to 29 are least likely to move out of cash, which is a bit concerning since they have the most time to gain from the power of time. If you or anyone you know has switched jobs, take a look at your rollover and understand how it's invested. Make sure your retirement savings are working hard for you. And remember, once you turn 73, you must take required minimum distributions from your 401k, IRA, or other defined contribution plans in most cases. Withdrawals are taxed as ordinary income and may be subject to a 10% federal income tax penalty if taken before the age of 59 and a half. Also remember that investing involves risks, and investment decisions should be based on your own goals, time horizon, and tolerance for risk. The return and principal value of investments will fluctuate as market conditions change. When sold, investments may be worth more or less than their original cost. 4 things you may not know about Social Security. Number one, in February 2024, the average Social Security retirement benefit was around $1,862 per month, or $22,344 per year, according to a May update from the Center on Budget and Policy Priorities. Number two, Depending on your circumstances, you may be eligible for Social Security benefits at any age. For example, if you are a spouse, child, or dependent parent of a deceased worker. Number three, benefits can increase with age. You can increase your Social Security benefits by delaying benefits until age 70. Number four, it can get complicated. Understanding Social Security can be tricky due to factors like earnings limits, spousal benefits, and survivor benefits. Don't take Social Security for granted. Understand the details and create a personalized strategy that works for you. A financial professional can help, kind of like Northbound Wealth Management. So you can give us a call at 317-399-1107. Here's a quick reminder. As December 31st approaches, don't forget to check your pre-tax health accounts. Remember those FSAs, HSAs, DCFSAs? So flexible spending accounts are called FSAs. Review your balance. Consider using the remaining funds for eligible expenses. And remember, many FSAs have a use it or lose it policy. So use those funds up by the year end. Number two, HSAs, health savings accounts. Check your year-to-date contributions. Consider adjusting your contribution amounts in 2025 if appropriate. And remember, HSAs roll over and contribution limits reset annually. Any money withdrawn from your HSA for a non-medical reason is considered taxable income and faces an additional 20% penalty. So be careful for that. This penalty is valid after age 65. This penalty is void after age 65. However, withdrawals would still become taxable income. Remember, once you start Medicare, you can no longer contribute pre-tax dollars to your HSA. Number three, DCFSAs, so dependent care flexible savings accounts. Verify your balance. Don't forget to submit receipts for eligible expenses. You have until April 30th of 2025, but it's best to stay on top of these things. Take a few moments to check up on any FSA or HSA accounts before the year ends. Here's a did you know? Did you know that for every $100 spent at a locally owned business, $68 recirculates and remains in the local economy? According to a 2024 report by Sustainable Connections. By contrast, the study found that only $43 stays local when you spend at a national chain. As we gear up for the holiday shopping season, remember that Black Friday is just around the corner on November 29th, followed by Small Business Saturday on November 30th. These upcoming weekends present an opportunity to support our local economies. Why not kick off your holiday shopping by grabbing a coffee from that local cafe, picking up a unique gift from the boutique down the street, or trying out that restaurant you've been meaning to visit? What's your favorite local small business? Give them a shout out in the comments to support them further. Stay tuned for the next segment. The Internal Revenue Service released an updated income tax brackets, standard deduction, and retirement contribution limits for the 2025 tax year. While these changes won't impact you for some time, it may benefit you to start thinking ahead. The top rate remains at 37%, but remember that's 2017's Tax Cuts and Jobs Act expires at the end of 2025. Overall, more than 60 provisions have changed at the federal level. Here are a few of the most critical changes in the federal tax bracket and retirement contribution limits. While the IRS has highlighted its changes, keep an eye out for any changes to the individual and business taxes that may be pending in your specific state. So, tax bracket inflation adjustment. Overall, tax brackets have been adjusted upwards for 2025. This adjustment is based on the Consumer Price Index and primarily accounts for inflation. The standard deduction has increased to $30,000 for married couples filing jointly, up $800 from the previous year. For single filers, this number increased by $400 to $15,000. Marginal rates. So marginal tax rate brackets are also increasing. Gift taxes. The annual gift tax exclusion for 2025 is now $19,000 an increase of $1,000 from the previous year. Estate tax credit. So individuals receiving an inheritance in 2025 will be able to exclude $13,990,000 from federal taxation, up from $13,610,000 in the prior year, which that's 2024. Right? So all information sourced is from the irs.gov website. Remember that we provide updates for informational purposes only. So consult your tax professional before making any changes in anticipation of the new 2025 levels. You can also contact our offices and we can provide you with information how the pending changes are happening and working. So Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming don't levy a state income tax, just so you know. And again, this information is from irs.gov. So go to that website, check it out, and speak with your qualified tax professional if for any questions, or reach out to our office. We'd be happy to help. With that, have a great week, have a great weekend, and stay tuned for the next podcast, which will release next week. Thanks for listening. Talk to you soon. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.